ever wondered what truly connects traders from Tokyo to London to New York? You just need to learn the language. That language is technical analysis. Understand its signals, and you'll understand the world. Welcome to Traders of the World. Here we skip the jargon and just figure it out together.
Hello, everybody.
Hello and welcome back to Traders of the World. I'm your host, Flávio Lemos. On the show, we sit down with the masters of the market to learn the lessons that charts and numbers alone can teach. Before we dive in, a quick note for our audience. If you get any value from this conversation, please do me a favor. Hit that like button, subscribe, and leave a comment below with your biggest takeaway from today's very special interview. For such a special occasion, I'm not alone. I'm thrilled to be joined by two fantastic co-hosts. First, Lucas Costa. Lucas is a technical equity analyst at BTG Pactual, and he hosts himself the show Traders Talk. Holding the CMT and the Brazilian CNPE certifications, he specializes in using chart analysis to identify trends and opportunities in the Brazilian market. And he is an active voice in financial media. Hello, Lucas. How are you doing?
Hello, Flávio. Hello, Mr. Acampora. Thanks a lot for this invitation.
And join us as well, my good friend, Rafael Figueiredo. Rafael Figueiredo is the equity strategist from XP with over 20 years of experience in the financial market. He is one of the Brazil's most respected tech analysts and also a CMT charter holder. Gentlemen, welcome. Over the years, I have had the privilege of speaking with brilliant minds like Greg Morris, Tom DeMark, and John Bollinger. But today, we are truly honored to be in the presence of royalty in our field. Our guest is a titan, a pioneer, and a legend. He is the man who fought for our profession when it was under attack. The man who co-founded the institution that certifies us. And the man affectionately known by everyone in the industry as the godfather of technical analysis, or il padrino of data visualization, as he now calls it. I did my homework. He co-founded the Market Technician Association, now the CMT, Technical Analysts Association, back in the 1970s, and also the IFTA, International Federation of Tech Analysts. He also co-authored the first 50 years, a history of the association, a must-read book, and I was personally honored to be included in this chapter on Brazil. Whenever he appeared on CNN, people worried that his predictions had so much influence that would cause the market to move like a self-fulfilling prophecy. And they never changed. For over 50 years, he has been a voice of reason, a master of charts, a mentor to generations of traders. From his legendary tenure as Director of Technical Analysis at Prudential Securities to his tireless work with the CMT Association, he has shaped our world as we know it. And his generosity stands far beyond the charts. I was personally moved when he supported a charity event in Miami to help children from Venezuela. Because of his help, they were able to donate all the profits to a children's hospital, funding more than 10 critical surgeries. That contribution says everything about the man he is beyond the analysis. Ladies and gentlemen, listen carefully to this. This interview isn't just about the market today. It's about the timeless stories and invaluable insights from a man who has seen it all. Please join me in giving a very warm welcome to the one and only Ralph Acampora. Ralph, it's an absolute honor to have you on the show. Thank you for being here.
Well, thank you very much, Flavio. You're too kind with those very fancy words and descriptions of me. I'm just an old man that loves to look at charts every day.
Still
Up
looking
is
at today?
Up is good and down is bad. Okay, that's all. Keep
Okay.
it simple.
First, ladies first. Go on, Lucas.
Ralph, please, let's start at the beginning. In the 1960s, Wall Street was a world dominated by fundamental analysis. What first drew you to the world of charts and price action? And what was it like being a technician in those early and often skeptical days?
Well, thank you for the question, Lucas. That's you know, I look at the cell phone today and I say, all you young guys have charts on this phone. In my day, we had to make it by hand. And even before I had breakfast every day, my boss told me I had to go to a company called Morgan, Rogers and Roberts and pick up the price reversals every day and take that sheet to my office and update 2,000 point and figure charts. That was my job. And you know what? I miss those days because you got a real good feel when you're doing it yourself, you know? So I'm not saying you have to make charts, but follow them carefully. Look for the breakouts and breakdowns. You get a real good flavor. That was, I got involved. Well, it's a long story, but I had an automobile accident and I was in the hospital. And my father's very good friend, Bill Downey, Mr. Downey, got me this job, the physician, the doctor that I had a spinal fusion operation. It was very serious. And every day he would come to the hospital, Mr. Downey. He was a Wall Street guy. And whatever he was reading, he threw in the bed, the Wall Street Journal, Forbes magazine, and Barron's. So I got a flavor for it because I was a history and political science student. And I got the flavor of the stock market. And he took me to Wall Street on crutches. And I tried to get a job. And the man said, well, you need an MBA and we'll get you a job. And I didn't have an MBA. But I saw in the Wall Street Journal a couple of days later, junior analysts wanted no experience necessary. That was the advertisement. Well, I went over on my crutches. I was so excited. I said, this is my job. I got to have this job. And the man that was interviewing me was afraid I was going to hit him with the crutch because I was so emotional. And he said, read this book over the weekend. Come in Monday, you get the job. And that book changed my life. That was the Bible in Technical Analysis by Edwards and McGee. And I fell in love with the subject ever since. And you know what? I realized after maybe 6, 7 months, 8 months of doing charts by hand, that I had an opinion. And people would ask me, hey, Ralph, what do you think of gold? I said, I like it. Why, Ralph? It's going up. And all of a sudden, people kept asking me questions, and I had answers. So technical analysis empowers you. I love the subject for that reason. And I've been teaching it ever since. And I love to spread the word.
Thank you for that. Ralph, I want to share a quick personal memory. The first time we met you was at 2022 CMT Symposium, right after the pandemic. You so generous volunteered to be our personal tour guide in Washington, D.C.
Yeah.
It makes me wonder, is it true that you actually work as a tour guide when you were a student? You love history, but see that passion for teaching and guiding has always been part of who you are.
Yes, when I was in college, I went to a university in New York, upstate New York, but a bunch of my friends said, hey, this company needs a couple of tour guides. I said, in Washington, I said, I'd never been out of New York. I don't know anything about Washington. So they dragged me down, my friends, because they were working for this company. And I fell in love with it. And Washington, D.C. is fabulous. There's so much history there. And you could take people around. So, and I was so glad to be able to give you a guided tour. And we did it at night, because that's the best time to see those monuments.
And with wine, with a bottle of wine.
Oh, yes. Of course.
It was cold. It was cold.
Yes.
Okay, let's turn to a defining chapter in your career. Many analysts today may not realize how close our profession came to a crisis. You have been a pioneer, but you have also to be a fighter for this discipline. I want to ask you about a specific and crucial struggle you led, the battle for the very legitimacy of technical analysis.
Yeah.
This is a crucial piece of history. Few people know that in 2004, technical analysis was almost legislated out of existence by the SEC Series 86 exam. Please walk us through that story, what happened, and what was your role in the fight to save our profession and ensure it was respected as a valid discipline.
Well, in January of 2004, a law came out, the Sarbanes-Oxley law. And that said that all analysts in Wall Street had to take two new tests, Series 86 and 87. 87 was new rules and regulations, no problem. But 86 mandated that you had to either have a CFA, fundamental degree, or you had to take this exam, and it was all fundamentals, nothing to do with technical analysis. In fact, it said if you didn't have this accreditation, you couldn't be an analyst. And I was an analyst over 30 years, and I was so upset. In fact, I was out in Minnesota when the news came out, and I got calls from my friends in New York. They said, "Hey, Ralph, get back home, fight right away. You got to fight this problem." And we did. And for me, the most important date in modern technical analysis history is Friday, December 17th, 2004, when myself and 3 other fellows went in front of 10 lawyers from the Securities Exchange Commission, lawyers from the New York Stock Exchange, lawyers from the NASDAQ. And I was so nervous. David Krell, one of my buddies, CMT guy, talked 3 minutes on the history of technical analysis. Charles Dow, and he went through all the basic stuff. Another fella, Ken Tower, spoke 3 minutes on our organization, talking about how it grew up and how professional we are. And the third fella, Barry Sine, spoke 3 minutes on the history of the exam and the test, our CMT exam. And I had the last 5 minutes, and I was very nervous. And I said to all these lawyers, imagine if tomorrow morning you lawyers are being mandated to take the medical boards. They're looking at me like I'm crazy. I said, assuming you could pass the medical boards, you wouldn't use that body of knowledge in your daily work as lawyers. And they're saying, yes. I said, well, that's what you're asking us to do. Please test us on our body of knowledge. And with that, one of the lawyers jumps up and says, oh, Ralphie, you're a nice guy. We see you on television. He puts a chart in my face. He said, what's fact on this chart? My knees are like rubber. I said, oh, my God, he's asking me a question. And I looked at it. I said, well, price is a fact. And his eyes were about this big. And I went like this to his chest. I said, and earnings are an estimate. You restate earnings. You never restate this chart. He said, damn good answer. I said, you better believe it. 3 months later, the SEC came out and said there are officially 2 analysts in Wall Street. One's a fundamental analyst who follows companies and has a CFA. And the other analyst is a technician who follows stocks and has a CMT. I am so proud of that. Yes.
The most important day of technical analysis history.
And that's the largest regulatory body in the world. And now it's available to everybody. So get your degree. And I very proudly put the CMT at the end of my name. I'm proud of that.
Me too. And he too.
What? Yes. I'm proud of that. Oh,
you are very proud of that.
Very, very emotional time. It was wonderful.
Thank you for that too. Oh, there is an incredible story about your mentor, Olo Shaw. He armed you with gold when you left for Kidder Peabody. a very traditional white shoe firm.
Oh, you did your homework.
Yeah, I did. Where they set you up in a converted bank vault. Can you take us inside the vault? And what was the first market call you made that made the partners finally understand the immense value of that gold you brought into the firm?
Well, at Kidder Peabody, I had, I started, first of all, let me say, when I started in the business, 1967, doing those little charts, it was a small mutual fund. And the man that started the mutual fund was CEO. It was a very small firm, only about 10 people worked there. And he was the economic advisor to President Eisenhower. Very, very wonderful man. He and I became very close friends. He said, I'm sending you to go get your degree, and you're going to become a portfolio manager. And he sent me to the New York Institute of Finance, and I was taking all these classes. And one of them was technical analysis, and that's where I met the teacher, Alan Shaw. This man, God bless him, he unfortunately passed away about 2 years ago. I don't know, honestly, I don't know where technical analysis would be today if it wasn't for Alan, because so many people came out of his class. And I started working for him. He hired me from the class, and I started working in 1969, 1970. And shortly thereafter, he was teaching 2 classes. Monday night was the basic class. Tuesday night was the advanced class. And he had little boys. He had 3 boys. They're now older gentlemen. They're good friends of mine. They call me uncle. And they were in the Boy Scouts. And he couldn't go to teach Monday night class. So he said, I need a teacher for Monday nights. I raised my hand and said, Alan, I'll teach the class. That was the best thing I ever did. And I taught technical, literally taught the street. Alan and I taught the street. All those floor traders and that, where could you go? That was the School of Wall Street. And I did that for 30 plus years. And I am so proud of that. And Alan Shaw, when it was interesting, Kidder Peabody, you mentioned that was a very fine Boston firm, and they had big office in New York. They didn't have a technical department. In fact, the CEO was very against technical, but they hired this new individual who wanted to get the sales force more involved with the market activity, and bring more excitement and trading ideas. And he wanted to hire a technician. He went to Bob Farrell at Merrill Lynch, #1 analyst, technician. And of course, Farrell wouldn't leave Merrill Lynch. I heard he went to Alan Shaw, #2 technician from Harris Upham, and he wasn't leaving. And I was the next generation. And it was because of the fact that the top 2 guys wouldn't leave that they came and asked me if I would like it. And of course, that's when I told Alan that I was made an offer I couldn't refuse. And he looked at me, he says, but you don't have a chart room. And I said to him, I dropped my head down. I said, yeah, I know. He said, you go up and Xerox everything in our office because you need a chart room. And here's my competitor now giving me, when I walked into Kidder Peabody with all this information and charts, I had gold in my hand. You had to do
it all again if you know that.
Yeah, I mean, he was so wonderful. I'm going to cry just thinking about it. It was just beautiful. Those are the people I met, and those are the people. Honestly, I am very impressed and so proud of the now generation. You guys, your generation, you got the same love, passion, and commitment to the subject that we had 55 years ago. So go, man, go.
When I first met Lucas, he published a thread in Twitter with my book. And I think a lot of books, don't Lucas? Tell me about that. And next question is yours.
Yeah, today I'm the head of technical analysis at BTG. It's an investment bank, and I got to the bank because of a 50 technical analysis books thread. I made a thread like telling the history of technical analysis and doing a kind of a reference guide through time of technical books. And Flávio Lemos' book is it's a kind of a big reference here in Brazil. It's the official book that you have to study to take the Brazilian exams to be a technical analyst. And it's as you talk, it's a lot about passion of charts.
Yeah.
So people don't understand it, but we are kind of passionate to the charts and the market activity.
Yes.
So I would like to ask you about your life at Prudential. You've coined some timeless phrases like the bigger the base, the higher in space, the higher the top, the bigger the top. And you spent a massive part of your career at Prudential Securities during incredible market cycles. Could you tell us a story from that time? And what was like the atmosphere on the desk like during a major event such as the 1987 crash? And also, speaking of memorable calls, I saw in a CNN documentary a story that you once won a 1962 red Corvette. How does on earth a technical analyst win a classical car for a forecast?
Well, I'll tell you that in 1987, we'll talk about that. I was with Kidder Peabody. I wasn't with Prudential then. I went to Prudential when I was in the 90s. But in the 80s, I was with Kidder Peabody. And people ask me, oh, what were your great moves? And I looked to tell them, well, I was right here and I made this call. And then I say, don't ask about my bad call. And listen to this. I was on the cover of Barron magazine the weekend before the crash with Bob Prechter and a couple of other guys. I can't remember. And Prechter said, he used the word crash. And I said, well, we're going to have a little pullback. Pullback. It was a disaster. So I had the direction right, but I didn't have the degree correct. That was the bad. And I'll give you the good news now, okay? When I was at Prudential, it was a wonderful firm. Very, very fine people. I'm a historian. I love history. All kinds of history. Behind me, I have so many books about the First World War, Second World War. I have all the presidents of the United States. And in fact, my bucket list is to visit every president's home or library in the United States. I've saw all of them. I got 4 left.
Oh.
Yes. And I'm going to go to, in Atlanta, Georgia, I have to go to Jimmy Carter. I have to see him. And then next year, Obama in Chicago. His library is going to open up. So anyway, that's a side effect. I love the history. And in 1985, the market kept climbing and climbing. And I have to tell you, one of the, I can't remember telling this story before. The first evening dinner meeting that we had, the market technicians, that's what our name was in those days, Market Technicians Association. The first evening dinner meeting, I'm sitting there and with my buddy, Johnny Brooks, because we founded the organization. We were two of the 3 founders. And between us was sitting the oldest technician I ever met in my life. His name was Ken Ward. Ken Ward worked for a wonderful firm called Hayden Stone at the time. Okay. And this is 1970. Man is about 80 years old. So that meant he lived through every bull and bear market in the 20th century. And I leaned over to him. I said, Mr. Ward, sir, what was the most difficult market you ever had to deal with, to write about? And I said, oh, excuse me, Mr. Ward. That had to be the crash of 29. And he puts his head down, and Johnny and I were all, the 3 of us, have our heads together. We were just talking to each other. And he said, oh, don't get me wrong. He had this grovelly voice. He said, don't get me wrong. We lost money in crack, but the most difficult market was the early 60s. I said, but Mr. Ward, it went up. He said, yes, and no one believed it. We fought it all the way. You go into the Wall Street Journal, you'll see me and all these other technicians saying, oh, it can't last, it's overbought, and they'll give it all sorts of, we were all wrong. I never forgot that. 25 years later, 1995, the Dow is up 900 points, no correction. And I said, I remembered what he said. And you know what I did? Again, in those days, not the computer. We didn't have the computer with all the information that now you have it all. But I went back to the New York Public Library and spent 1 month reading every Wall Street Journal every day from January of 1962 all the way through the end of 1966. And you know what I found out? Low inflation, low interest rates. And I wrote this big report, and it was a 58-page report. I gave it to my boss, the director of research, and he said, Ralph, this is crazy, because I said the market was going to go to 7,000. At the time, the Dow was at 3,800. They thought I was crazy. And he said, well, we can't let you print this. We have to take it upstairs to the CEO, and I'm putting the firm at risk.
Tough call.
Oh yeah, this is a real crazy call. And the CEO, Rick Simmons was his name. He called me up to the office, and he had my letter, my draft over the trash can. He said, you want me to drop it into the trash can? I said, yeah. I said, nah, I really think we have something here. He said, okay, I'll let you write it. Okay. Well, I mean, I got permission from the boss, and all the way down. And I to this day, I wish I could find him. I'd love to hug him again, because he was willing to take the risk. And it was a risk. I mean, it was crazy. And everybody thought I was totally out of my mind. And every time it corrected, I said, oh, buy more, buy rotation. See? And that's, I think, either Alan Shaw or myself coined this phrase. The bull market, the lifeline of a bull market is rotation. Rotation is the lifeline. As long as you got money rotating from the leaders into the laggards and the laggards back into the leaders, you got a bull market. And that's what happened. I said it would take 3 years. I was wrong. It did it in 2 years. And when the Dow hit 7,000, the chairman of the company calls me up, Ralph, and I'm so happy. My feet aren't on the ground. Everybody's, this is great. And he said, Ralph, I said to him, Wicky, you're going to take care of your good guys. You're going to, give me a few extra bucks.
Yeah.
He said, don't worry, we'll take care of you. He said, I would like to get you a little gift. I said, oh, Wick, I've been wanting this gift for 35 years. He said, what's that? I said, a 1962 Roman red Corvette. And he hangs up the phone. It was a joke. A month later, that car is sitting in the lobby of the building, and the license plate reads Dow 7000. And that was history. I still have the car, by the way.
Oh, yeah.
Well, I had it, I sold it, but I still have the 57 Corvette.
Olá, espero que esteja gostando da entrevista. A Trader Brasil foi eleita por 2 vezes no Rank Awards 2024 e 2025 como a melhor academia de formação de investidores do Brasil. E ela tem um presente para você que está assistindo esse podcast. 10% de desconto, é só usar esse QR Code que está aqui embaixo e a gente te espera lá, ok? Agora não esquece de dar uma moral pro Flávio. Curte, compartilhe esse vídeo e se inscreva no nosso canal, ok? Até a próxima e obrigado pela presença. Valeu!
Ralph, some commentators on CNN fear his televised appearances were creating kind of self-fulfilling prophecies. And following up on that, you've navigated some vicious bear markets. Is there a particular market top you are proud of having called? And more importantly, what is a key lesson you learned from one of those downturns that has stuck with you?
Talking about Dow 7000, and when it hit 7,000, 6 months later, I wrote Dow 10,000, and it went to 10,000. So everybody loves Ralph. This is the greatest. And on the way up, I went on a holiday. I went on a vacation. I went to South Africa. I went on a camera safari, looking at the animals in the real. Oh, that's very interesting. I recommend that. That's a very unique vacation. But when I came back, the Dow was down 500 points. I went, oh my heavens, what happened? I mean, I didn't see that coming. And everybody's saying, what happened? What happened? And I went through it quickly. I was going through all this stuff on the weekend at home. And I saw all the big Dow stocks, all the S&P, the large cap stocks were getting crushed. The breadth wasn't that bad. It was these stocks. And I'm saying to myself, boy, large money is getting out. Institutions are getting out. This is there's something wrong. So I came out and I said, ladies and gentlemen, I said, we're going to have a 20% decline. Well, the press was very angry with me because I was the bull, and now I'm turning bearish. And one thing about technicians, they see something happening, they see the market doing, but they don't know why. I had no idea what was going on, and boy, did I get hell from the press and the guys on television. In those days, they were tough. And boy, they just nailed me. It got to a point where are you ready for this? I needed a bodyguard to protect me walking to my office. I had threats on my life. I mean, it was crazy. This is because I was Mr. Bull, and now I got bearish. Guess what? 3 weeks later, the Russian bond problem and long-term capital went belly up, and that's exactly why they were selling it. And then when it went down and it dropped to 20%, everybody said, well, I guess he was right. I wanted to punch somebody. I said, yeah, now you're saying, yeah, I guess I was right. Oh, so after that, I started shying away from the press. I said, I had my 15 minutes of fame. I don't need that. And if everybody's going to react to something I'm saying, good or bad, they don't need this, and I don't need this. And if you go back and look at the top that formed in the year 2000, it took a whole 12 months of churning and churning and churning and churning. And that was when the bubble popped. You know, they talk about the bubble popping. And yeah, that was in November. No, that was March of 2000 when the bubble popped. But it's still, the market was churning. And towards the end of that, like November, December, I went to the company. I was still with Prudential. I said, I'm not going to get on television to say this. I said, I think we got a real severe market coming down. And I could get classic, all the tops in the charts. They were there. And that's where the phrase comes, big top, big drop. And it came. I was very proud of that move, but I didn't make a big deal out of it because I didn't need the aggravation with the press. And after that, I shied away from publicity. I don't.
Good for you.
Yeah, you know, you really don't. Just do your homework, take care of your friends and your clients. That's what's important.
As you said, technical analysis is a universal language. It's used and applied all over the world. It doesn't really make a big difference whether you are in Japan, Brazil, or New York.
Well, think about it for a second. What's the formula? It's supply and demand.
Supply and demand.
Well, that's technical analysis, buyers versus sellers. It's the same. You hit it right on there, Flavio. That's what it's all about. And you see the movement. What you should do is try to find out why it's happening. And then people understand your story. But if you come out like I did, it's a bear market. And I didn't have a reason at the time. But later it became very obvious that all this money, all these big institutions were selling because, you know, when I get up in the morning, I make one major assumption. I do this every day, that someone outside my room knows a lot more than I do. And they're buying and selling on information that I do not have. But guess what? Whenever they move, I can see them with the chart. So you see the money going. You can see the money going. But you don't, most times you don't know why. So that's what research is all about. You find out why. I call that fusion analysis. When you take a good technical picture and you find a fundamental story for it, man, you got a home run going.
So it doesn't matter if you are in Japan and Brazil. But
No.
speaking about Japan, there is a legendary story about your role in bringing Japanese candlesticks to the West.
Oh,
Could you
wow.
share how you first encountered and realized their revolutionary importance for our side of the world?
Wow. Boy, you did your homework.
Yes,
Woo.
I did.
In 1975, now the organization, Johnny Brooks and I were running around getting people together. That started in 1970. And I started teaching in 1970 at the school every Monday night. The school moved from Wall Street, which was a great address they had, to 70 Pine Street. And 70 Pine Street, and the fellow that was running the school was a wonderful man, good friend, and he was showing me the floor plans of the new school. And I looked at it. I said, "Gee, what is that little room there?" He said, "Well, that's a closet." I said, "Well, if you move the wall a couple of feet over, you can make a little library for us technicians." And he said, "What?" That was the start of the technical library. It was at the school in 1975. So we had this little room. And then we started to talk about creating this institute. What was your question again? I'm sorry.
Okay. So, how is your role in bringing Japanese candlesticks to the West?
Oh, yes, yeah, okay. So we had this library, okay? That's 1975. Guess what? December 7th, 1981. That's the 40th anniversary of Pearl Harbor. Guess where Ralph Acampora was?
Japan.
In Japan. The plane landed. I'm there. I'm at Kidder Peabody. I'm only about 2 years working for the firm, a year and a half maybe. And they didn't tell me you got to bring a lot of cards. They didn't tell me you take your shoes off when you're the Japanese. You got to be very. I did everything backwards, the ugly American. But they were so kind, and the Japanese technicians. I knew a lot of them because they would come to my office when they come to New York, and now they invited me over there. So I went over my first trip, and it was wonderful. And the Japanese always give a gift. You know, they like to give you something in memory of the occasion. Well, after 3 or 4 days of being there, meeting everybody, and they gave me this little gift. It was a book. And, we opened the book this way. The Japanese opened it this way, because they write differently, obviously. They write backwards. We write, anyway. So I'm on the plane, I'm looking at the book, and it's all in Japanese. I don't know what it is. I said, I don't know. What do I do with the book? I put it in the library. Where else? I put it in the library. This is 1981. There's a guy by the name of Steve Nissen, isn't it? Steve Nissen. He was a young technical analyst at Merrill Lynch. And he was a member of the Market Technicians Association. Apparently, one day he goes to the library and he's looking around. And he takes the book and he has it translated. So he gets the credit for starting.
You brought the book.
It was my book. You know what? I have to tell him that. To this day, I haven't told him that yet. I got to. One of these fine days, I got to call him up and say, "Hey, buddy."
Oh, you can talk. He was here in the show. I first met Steve Nissen. Yeah, he was here. I first met Steve Nissen in 2003 in Las Vegas, Monday show. Oh. And he later gave me the honor to be participating here in our conference, Expo Trader Brazil.
Wow.
And he was at a fancy hotel that I placed at him. And 7 in the morning, he knocked my door. Flávio, you need to go to the kitchen of the hotel with me. Oh man, I'm tired. These shows is very huge. Okay. Yeah. I placed some Bermuda, flip-flop, and let's go to the kitchen. So he ate fruit. and he didn't know the name of the fruit. It was jackfruit. Jackfruit is a smelly, like dragon fruit. It's a very smelly fruit from Brazil. We call jaca. But he loved it. He wanted to bring the seeds to USA to plant it there. Okay, but it's an awesome story.
That's cute. That's cute.
Let's move the subject.
Hello, Ralph. This is Rafi. What a great pleasure to have you here with us. On behalf of all Brazilian technicians, I must say thank you very much for all your contributions to the industry, and make sure that you, and with your work, crossed all possible borders around the world. So let's talk about down theory. A common critique is that the transportation average is an outdated barometer. How do you view its validity today when moving microchips is fundamentally different from moving coal a century ago? Thank you.
Do you remember a lady by the name of Abby Joseph Cohen at Goldman Sachs? Abby
Cohen.
Yeah, well, we were competitors and we were in the same building. You know, a very nice lady. And every year, both she and I would participate in there was a university that had these conferences, and she would go and I would go. And one night, we're both sitting at the conference table. We're giving this presentation. And I mentioned Dow theory. And she says, "Stop, Ralph. No one looks at railroad cars anymore. That theory doesn't work anymore. Wow, why do you even talk about it?" She was giving me a hard time. I said, "Oh, really? Well, okay. I don't know what to say." And she said, "You know what we look at today? We watch carefully the manufacturing of these things because they tell us what's happening. Products are being moved around." I said, "What's that, Abby?" She said, "Cardboard boxes. The manufacturing of cardboard boxes." Think about it, guys. If you came to my house, God bless my wonderful wife, Rosemary. She's on this all day, and we have boxes outside my door. And my dog is very friendly with the Federal Express guy and the UPS guy. I mean, they give the dog toys and candy and stuff, and it's amazing. But you know what I said to Abby? I said, "Guess what, Abby? If that's true, Abby, the cardboard box is a way of measuring how well things are moving around." I said, "You know who moves most of those boxes? Federal Express and UPS, and they're both in the Dow Jones Transportation Index." And she just, so she taught me something, and I hopefully was able to retort the crowd. But you know what? Let's talk about the current market for a second. You know what? If you look over your shoulders, all these things are on all-time new highs. The Dow, the S&P, the NASDAQ. You got the magnificent 757, whatever it is. They're going up. Everything's making new highs. Isn't that wonderful? What average is not making a new high? The Dow Jones Transportation Average. In fact, it is now about 13% below its November 24th, 2024 high. So it was here, now it's here. And I tell you, go look at that average. It's got a lot of supply overhead. I don't know if it's going to make a new high anytime soon. And I tell everybody, I am very bullish, and I have been for the last couple of years, and I still think the market is going to do well between now and the year end. Okay, U.S. market. I think we're going to go a lot higher. Okay. If we don't make a new high in the transportation average between now and the year end, in other words, if we start the new year, 2026, and there's negative divergence, the industrials are making new highs, the tranny is not confirming, the old Dow theoretician in me is going to say, uh-oh, what's going on? Second observation. President of the United States, whoever he is in the office for 4 years. First year, he's usually up. I didn't vote for him, but the market's okay. Second year of a president's term in office, usually down. You got a bear market. Third year is the best of all four. And the fourth year kind of diddled it around. Guess what? 2026 is Trump's second year in office. So just for a second, step back and say, here we are, let's say, close our eyes. Now it's December 31st, 2025. It's the end of the year. I'm having my cocktail, celebrating the new year. And the transportation's here and the Dow is up here. I'm not going to be liking that, guys. Just a thought. Just keep that in the back of your mind. Because everybody's talking about the new highs. No one, I haven't heard anyone talk about the transportation index, which is 13% below its high. Sorry I rambled on, but that's a good.
No, it's
No, that's some wisdom here.
That's where technical analysis comes in, when you forecast or you look for things that are going to shift. I'm looking at that carefully, but I'm not worried about it today. But at the end of the year,
as you said about UPS, so you were probably looking for an UPS from Brazil, okay? Because we sent you a bottle of cachaça in the name of Brazilian Analyst Association and the CMT Association.
Yes, I want to thank you, but I don't know. Is that fruit juice or is that white wine or what? What is
cachaça? Is like a rum, right?
Rum,
like a rum. And
it's made with sugar cane.
Yeah, sugar cane. Yeah, it's a distilled alcohol, very alcoholic. But you need. I will teach you how to make a caipirinha, and I send you the recipe for the caipirinha. Probably it's now today is hot. You in your Minnesota?
Oh yeah, very hot.
Okay, so kind of caipirinha will do a wonderful time for you. Okay, caipirinha means.
You said it's going to be delivered on Friday.
I think yes.
Saturday I'm going
to deliver on Friday.
Go to Dubai on Saturday for the CMT conference in Dubai. So when I come back,
I
will have that. So, and
you'll love it. You'll love it. Okay, Lucas, shoot one.
Salute. Thank you.
Ralph, please, let's talk about the power of patterns. You often say that charts reflect human behavior. In your decades of charting markets, what is the one price pattern or setup that to this day never fails to fascinate you?
Well, I'll tell you what I do every weekend. Do you know Craig Johnson, Flavio?
Yes.
Yeah, he's a good friend. He's an excellent technician. The guy is wonderful. Well, he has a service that you can get. You can get in fact, go online and he'll send it to you. It's a weekly. It's called the Mansfield charts. Do you know about Mansfield?
No.
Oh no, you got to get it. Ask him. I'll get it for you. Mansfield charts. All the New York Stock Exchange listed stocks are in there, and they're weekly bar charts. You got about 3 years of history, a little chart like that, and it's online. Okay, so what does Ralphie do when it comes out on Saturday morning? I sit there, and you're asking me about what pattern and all. No, yeah, I look for bases and tops if it's breaking down. What I look for is breakouts. If I see a breakout upside or downside, it could be from a little bit of an ascending triangle or something like that. I look at that and I write down potential bases, potential consolidation areas, before the breakout. I look for potential bases, and then I look for breakouts. And I got these two lists. And then I have stock charts. You heard of stock charts, of course. Dave Keller, Dave. Yeah. And I look at those stocks that I listed on price on a weekly basis. I look at them on a daily basis. Are they breaking out on volume? Is that consolidation with good activity? Are we getting a golden cross or the RSI or something like that? That's how I do my research every weekend.
Oh,
answer your question, it's not one specific indicator, but I'm looking at breakouts, breakdowns, and if it happens to be an indicator or a pattern that, like, rectangular bottom, whoa, that even more important. So breakouts, breakdowns.
So the next question is kind of a personal one too, because of the work that I do here in the bank. At Prudential, you had to advise sophisticated institutional clients while also supporting the retail brokers. How did you tailor your analysis for these two very different audiences? Could you share a story about bridging that communication gap between institutionals and retail?
Institutions, they wanted bigger names, and they wanted to shift in sectors and all that, which you do in your homework. But I created a product, Jimmy Cramer on television. If he ever sees me, he goes, "Thrice blessed, thrice blessed." What I would do, I would go down to the research department, and Prudential, we had a very nice fundamental research department, many analysts, 30 analysts, whatever it was. I said to the guy that was running the department, fundamental department, I said, "Give me all your buy lists. Give me all your buy lists, buy stocks. They have rated buys. Let's say I have 150 buys. I take that list, I walk down to the quantitative analyst. I said, here, 150 names. Which ones do you like?" And maybe he has 100 names that he likes. So instead of 150 on my list, I am down to 100. Are you with me? Fundamental likes these 100, and the quant likes these 100. I take those 100 and I take them into my chart room, and I see how many of those 100 stocks do I like, and maybe 75. And that would be my report once a month. And I call it thrice blessed. Everybody likes these stocks. I think that was wonderful research. I'm surprised no one's doing that today. I don't see anybody doing that. And Jimmy Cramer came when not too long ago. I was on the floor of the stock exchange. And he doesn't even say hello. He grabs me. He says, "Thrice blessed, best research ever." I said, "Jimmy, 25 years ago, I don't. But no one's giving that research anymore. You did all my work for me," which is right.
Ralph, this tool is everything anything to do with Argonne grid?
Argonne?
Yeah. Acampora relative grid of 9.
Oh, wow. Woo, did you do your homework? Did you look at Argonne?
Yeah. Can you explain a little bit for us in simple terms how it works?
I wish we had charts. We know what relative strength is, right?
Yeah.
Right.
If the stock is going up, it's outperforming the S&P 500, right? Stock is going flat, your stock is even with the S&P. And if the relative is going down, you're underperforming. Well, I said, I was at you asked about the retail clientele. I would have lots of retail meetings. The retail brokers loved it because they had lots of ideas and talked to their clients. And I was at a retail conference for Prudential. And one guy came up to me and says, "Ralph, you said you like this stock because it's beating the market. But I'm losing money. It's going down. What the heck are you talking about? I'm down 20%. Stock you said it's outperforming." And then another guy comes up and says, "Yeah, Ralph, you said this stock is underperforming because it's underperforming, but I'm making money. What the heck are you doing?" And it dawned on me that we in the institution, in this industry, only look at the direction of relative. What about price? So I look at relative, not 3 versions, up, neutral, down. It's got 9 versions. Acampora's relative grid on 9. For example, up in price, no, up in relative, up in price. Okay? You can't get any better than that. You're making money and you're beating the market. Oh my God. Up in price and flat in price. No, up in relative, flat in price. You didn't make money, you didn't lose money, and you're beating the market. It's okay. You know? Up in relative, down in price. You're losing money, but you're outperforming the market. So that's 3. 4, your relative is flat. Okay, you're not losing money, but your stock is making money. Your price is up. Hey, Ralph, what do you mean? I'm doing all right. I'm up 10% and the market's flat. So what? I'm outperforming. I'm making money. But he's only up 10%, so he's even with the market. 5th is you're flat in price, you're flat in relative and flat in price. 6th, you're flat in relative, you're down in price. Gee, Ralph, you said everything's all right. I'm even with the market, but I'm losing money, Ralph. What are you, crazy? 7, you're down in relative, but you're up in price. Ralph, I'm up 10%. Market is I'm up 10%. Market's up 15%. I'm underperforming, but I'm making money. 8th, I'm down in relative. I'm flat in price. Well, I'm down 10%. Market's down 10%. That's all right. And 9 is the worst. You're underperforming the market and you're losing money. So the market's down 10%. You're down 15%. You're dead. That's argon. And you know what? Julius de Campano, I call him the spin doctor. He really, when I had it on a piece of paper, we were at, I think we were in Seattle, Washington at the stock charts, actually. And I put these pictures down, these 9 pictures. He said, wow. And then he said to me, no, I said to him, can you make a thing out of it? Ralph? Yes, honey. Yeah, yes. And he created argon. He calls it Acampora's relative grid on 9. And you know what? No one really bought into it. I thought maybe it would catch on, but maybe someday.
Lucas.
So the next question that I have here is that even the godfather of technical analysis can be humbled by the market. Could you share a story about a time a big call went against you, and what was the enduring lesson you took away from that experience?
I was just trying to think recently. You know, I'm advising a family fund now, and I could be a little aggressive trading, but I try to be longer term oriented. And you know, President Trump keeps talking drill, baby, drill. So the company, the family that I'm talking to say, Ralph, you got to buy some drilling stocks. You got to buy. And I said, wow, you know, oh, okay. You know, so I picked out Halliburton, and it did nothing but go down. But actually, I'm bringing it up today because today it had a good day. It popped finally. It finally broke its 1.5 year downtrend on a weekly basis. So maybe, you know, I had a lot of egg on my face. I mean, we were down 30%, 35%. Maybe today we're up a little bit. You know, maybe we're only down 30%.
Okay.
So that's embarrassing. But I was trying to satisfy the demands of the client, you know, and I went with it. Chart at the time didn't look great, but it didn't look terrible. And it just fell apart. And so, but they're still talking to me, so we're okay.
Let's see on Christmas dinner.
Yeah.
Dinner. Or in the Thanksgiving dinner.
Yes.
Okay. Anyone who follows you knows about your famous shark barn, an incredible physical monument to market history. Could you tell us the story of how that began?
Yeah.
What inspired you to start charting the Dow on your barn wall? And what period of market history does it cover? And one thing else, and with the market's incredible growth, is it true you are considering a switch to a logarithmic scale? Do you sell admission tickets to watch this beauty?
I'll tell you what happened. It was 2017. That was my 50th anniversary on Wall Street. 50 years. And we have this farm in Minnesota. And my lovely wife has her barn with her horses, and I have this barn, and I have equipment in it and everything. And the north wall of the barn is white. It's old paint and no windows. It was just flat. And I said, boy, that'd be a nice screen to put the history in, the 50-year history of the Dow, starting in 1967, going to 2017. And I used a monthly bar chart, and I had how many feet per month, but I had a problem. How am I going to put the numbers labels on there? I'd have to drill holes into the barn wall. It's a metal wall. But I found a fellow that makes plastic labels. Boom. This is easy. So I put the Dow Jones Industrial Average, And I said, well, gee, I wonder what was going on in that period. And I have these red lines, he's going this way, the recessions. Who was president at the time? So I get the presidents. And Craig Johnson said to me, you got to have gold and silver on your chart. So I put gold colored paint and the silver colored paint. I have gold. And then he said to me, or someone else said to me, he said, Jay, why don't you put the moving average on? So I got the 30-month moving average on there. So I have all this stuff. Then I decided what happened that year. These little green labels. What happened that, I take 2 or 3 events that might have happened, that wasn't, and that was the North Wall. And the Wall Street Journal calls and they said, we hear you got the largest hand-painted chart of the Dow Jones in history, and we would like to do it. I said, wait, when the Dow goes through 24,000, you can say the market went through the roof. It was right up at the top. And they did, and they came out. Well, after that was all done, I don't know, 6 months later, I said, gee, I wonder if I go all the way around to the south side of the barn, how much history could I get? It goes back to 1859. You know what happened in 1860? The Civil War in the United States. I have the war. I have the First World War. I have the Second World War. I have the Spanish-American War. I have all these wars. And then I went back and found an average that existed before the Dow Jones existed. It was Macaulay Railroad average, and I used that. And then we start with the Dow. Charles Dow, his first average was the railroad average before the industrial average, and I have all that down. I have all this history. Wow!
It's a log scale.
Yeah.
Say it all again.
So we're updating.
Okay. Ralph, in your best-selling book, you literally wrote the playbook on mega bull markets. Applying the framework you developed, how does the U.S. market today stack up? Are we exhibiting the classic signs of a mega market? Are you seeing important divergences?
Well, okay. When the Dow hit 10,000, everybody loves Ralph and all this sort of stuff. And you remember this Wick Simmons, the chairman? You know, he comes into my office, says, I want you to write a book. I said, excuse me? He said, I want you to write a book. You know, you got this publicity, you can, you know. I said, oh, when am I going to write a book? I said, God, I'm working about 10 hours a day. When am I going to write the book in the middle of the night? And I thought about it. Now, you remember, this is 2000, 1999, 2000, okay? What happened in the last 10 years? The Berlin Wall came down. The Berlin Wall came down. I said, peace. Peace. So I went back to the Civil War, because I had the history of it, the Civil War. And what did the market do after the Civil War? By the way, if you go back and look at any time there's war, the market goes up in the face of war. They buy on the sound of cannons roaring. You sell on the trumpets of victory. I mean, and that's the quote. But, you know, it works. So I said, look at the map. Then the First World War, after the First World War, we had the Roaring 20s. That's when the market went to the height. And then the crash in 29 came. Then the Second World War, they said the Depression ended when the war started. Actually, that's what stopped the Depression. And we had the 60s, we were talking about that. And then I said, well, the fourth mega market is the Berlin Wall coming down. And here we're going to, we're going to have peace. You know what? The wall came down in 1991. In 1993, the federal government went to the New York Institute of Finance, the New York, the school. Mm-hmm. They went to Moscow, to Russia, to talk finance. They sent me. I taught the Russians technical analysis. And at the coffee break, we didn't have coffee, we had vodka. Woo. Vodka. Ooh, the charts look great. But no, seriously. Yeah. So I was part of that, and that was the theme of the book. Okay. The good news is, the book is out. Everybody's happy. The boss is happy. And that's what, but I don't know how many it sold. But anyway, there's an old saying. There's this saying, if you give them a date, don't give them a number. If you give him a number, don't give him a date. See, I gave him a date. I said the Dow would go to 20,000, was going to be a double, by the year 2020. Well, on the way up. No, what did I say? 2000. 2015 was supposed to be the date. I gave him a number, it was supposed to be the date. Well, we had the financial crisis, remember 2007? Yeah. You know where the Dow was at that point? It was at 14,000 when it dropped. So we were close to my target, but we didn't get there.
Again.
Yeah. And CNBC, the day it hit 20,000, they had me on because they remembered that. And I had the book I was waving. And I said to the guy, I'm a little off on the timing. And I said, the subprime got in my way. And the guy says, subprime got in everybody's way. So the subprime market in we remember 2007-8 was just a disaster. And my whole timeline got thrown out.
But today, with this artificial
intelligence
thing, does it characterize mega market for today?
Good for you, because I didn't finish my thought. I was just talking about that period. Okay, what do I think today? I heard someone say on television the other day, what we're going through right now is the same as when the caveman discovered fire. I mean, it's going to change your life. I mean, I'm the last guy you talk about new technology and all. I'm still looking for my on and off switch. But I'm an old man. But I'm fascinated by what's happening. And then you saw it just, what was it, yesterday? NVIDIA talking to all these guys and putting money into them. No, I think there is a big boom out there. And it is a mega move. And you know what bothers me when people say, well, we got all these tech stocks, they're over the bubble here, just like the late 90s. No, it's not. In the late 90s, you had companies that didn't have earnings. There was .com this and .com that. Those stocks didn't have earnings. These companies are real companies.
Yeah.
And again, I don't know the intricate fundamentals of it, but what I hear and was reading, AI is, we're in the infancy of that.
Yeah.
So yes, to answer your question, yes, I think that's the next mega move, without a doubt. Without a doubt.
That's what, Lucas. Go on.
So, Mr. Acampora, the world has changed dramatically since the days of Schabacker, Edwards, and McGee. As you look at the landscape today with algorithms, AI, social media, what is the one timeless piece of wisdom you would pass on the next generation of analysts to ensure they have a long and successful career just like yours?
So glad you asked that question, because Jay Woods? Did you ever meet Jay Woods? Yeah.
I've been in the New York Stock Exchange with him.
Yeah. Okay. Jay Woods tells me that 80% of the trades are all algos. That's why you don't have people on the floor anymore. You don't need people. He said you need people twice a day, at the opening price, so get it going, and the closing price. But during the day, the computers do everything. And you know what? I think, again, I'm not a professional in any of this, but a lot of those algos have to be based off technical, because they know where the 50-day moving average is, they know where the 200-day moving average, they know where there's the highs and the lows, and and that's, a lot of that is built in. Okay, having said that, yes, I think they play a very important part of the game. Do they change the game? Maybe a little, but I don't think you still come down to price. You still come down to people buying breakouts and breakdowns. That'll never change. That'll never change. And those patterns, keep looking for them. You see double bottoms and all that sort of stuff. So yes, I believe a lot of the volatility, you get a lot of this volatility that normally I don't think would have happened when you had all those guys on the floor. But no, I think stay with the basics of technical analysis. And I'm going to leave with a quote from President Bill Clinton, President of the United States, Bill Clinton. You know what he said? Follow the trend lines, not the headlines. That's
Rob, thank you for immense contribution to the field and for sharing your time with us today. It has been a true privilege. Lucas, your final word.
And I'll have a drink for everybody, okay?
Okay, thank you.
Thank you for having me.
Thank you for wife, bro. I'm delaying you to the dinner.
Yes. Okay. She's the boss.
Yeah, I know that.
Oh, yeah. I get this little list. Honey, do this. Honey, do that. That's the honey-do list. Okay?
Honey, do this. Hey, that's all we have for today on Traders of the World. A huge thank you again to the Godfather himself, Ralph Acampora, and to my co-hosts, Lucas and Rafael. Until next time, trade with discipline, stay patient, and let price be your guide. Take care, guys.
Right.
Bye-bye.
Yeah.
Okay,
Bye-bye.
we are good to go.
Já foi.